Hey everybody, great to be here with you for After the Close. My name is Mike Fairborn, and sitting in for Barb Armstrong, who's out sick. Hope she's getting to be feeling better soon. But it's nice to be here with you all today. I'm joined in the chat by Cameron May, who's listed in here for us our X handles. You can follow me at Mike Fairborn CS as well as Cameron May CS as well. Folks, there has been a lot of volatility in the markets. Despite that volatility, where are some of those areas where we might see bullish strength? Want to talk about that in more detail today as we look at what's showing the bullish strength now and how we could see bullish strength based upon what we saw today, what we might see in other securities after, or I should say after today, tomorrow, throughout the rest of this week, and maybe into next week as well. So looking forward to diving into that with you. Again, great to be with you all and welcome. I do recognize many of your names. Good to see you. And folks, yeah, any questions, comments, throw those in the chat so we can address those for you. Well, let's do this. Let's dive into some disclosures to get going here. All right, information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security chart pattern or investment strategy. Now, options carry a high level of risk. They're not suitable for all investors. The Paper Money software application is for educational purposes only. Important to note, the successful virtual trading during one time period does not guarantee successful investing of actual funds during a later time period, as market conditions constantly change. Investing does involve risk, including the loss of principal. Some additional points here. Stop loss orders will not guarantee an execution at or near the activation price. Once activated, they compete with incoming market orders. So a key note there, with a stop limit order, you do risk missing the market altogether. In a fast-moving market, it might be impossible to execute an order at the stop limit price or better. So you might not have the protection that you sought. Lastly, past performance of any security strategy does not guarantee future results or success. And that is all we've got for our disclosures. So let's do this. I'm going to go ahead and just share with you the Thinkorswim platform here. We'll take a look at a brief look. We'll just do a brief look at markets. I imagine you guys have seen the markets and a lot of discussion on markets this whole entire week. And here we are, and maybe during, throughout the day as well. So I just wanted to briefly take a look at the markets. Just a quick note on a few things. I can't go into greater detail, but I figured, hey, let's just go ahead and take a look at some of the basics as we look at the market. I mean, obviously, you can see what's going on here. The market has had a fairly sharp pullback, and here we are again pulling back. Now, where might we find maybe our initial levels of potential resistance coming in? It could be at an area that we just broke through fairly recently, which is the 200-day moving average. Although I did put in here for you guys right around that 5660, a horizontal level that had shown some historical significance initially as resistance and resisted through there. We broke above it, and then it became more of a support and a support. Now, that we are back below that level, that actually could be the initial points in terms of a resistance now, right at that level. And just above it, we've got the 200-day moving average, which, by the way, we have done a pretty good job holding above for quite some time. But I wanted to look at maybe a couple of resistance points. And I'll just say this one's first, so maybe one here, two here, that we can see on the charts. Using one historical support, one, a long-term moving average that is very, very frequently used. I'll go full screen here and highlight this. Let's do this. I want to just show you to a 2-year, and then we'll be done with this. Last time, we were really down here was right around this range, which is November of 23, actually, 23. Notice what we did do. After a pullback, and we'd actually had a pretty substantial run up, well, we bounced back and we went up above that 200-day moving average. So I wanted to highlight that. One last note, MACD down here, it's pretty wide, right? You've got an open range really here on that MACD between the average of the convergence and divergence of the 20 and the 12 and 26. It's pretty wide. We haven't begun to really tighten up that range yet. So that just lets us know that, yeah, the downward trend here is pretty much intact. And I'm just going to throw in one last little note because I think these are useful. I'm going to look at these today as well. But if we're looking at a 10-period moving average, have we gotten anywhere near that 10-period moving average? which is just really a short-term guide in terms of market, strength or weakness. And folks, we are clearly holding below that 10 period. As you can see, we're a long ways away. Normally, this is fairly close to price, but price is really, quickly moving. So we'll see. But we're seeing some weakness. And that brings up the point, and because I know many of you, like myself, I do tend to look at more bullish scenarios than bearish, just generally speaking on a big picture level. But, where have we been seeing some of the bullish strength coming in at? That was going to be one of the key points I wanted to talk about. And where might we see it continuing later into this week? Well, let's go over here and take a look at GC. There is gold. Now, gold did just have a fresh breakout right here. Now, conversely, and I'll really zoom in on this. We'll go to actually do a 6-month chart here. A couple of things going on with gold. Let's highlight this as we dive into gold a little bit here and just kind of contrast that with the general market. And I want to kind of talk about, what might be pushing gold up higher. I think those are important points for us to consider. Let's take a look. What are you guys seeing? You might be seeing the obvious, just in price action first. We're breaking above some highs right there. That's a pretty clean, clear breakout. Let's just explore, too, this price chart. In my Tuesday class, I look at a lot of swing trades. And we're probably going to be looking at some swing trades into next week on gold. Okay, but that's a lot like a bull flag pattern, right? You have a big run up and we've gone sideways here. Now, these oftentimes are looked at for traders for indications of a follow through because you are getting so much strength over here. And you are getting just very little, comparative weakness to the downside. When it comes time for the natural ebbs and flows in the market, you're really not seeing much of a pullback here. And yes, I've been watching volume on this, Helen. Absolutely. In terms of what we've got here, and you can kind of see volume as I highlight this. You might be looking at volume big picture, though, in some of the other categories. But for gold, definitely, and that's on a breakout. You can see that gold did spike here, too. The volume broke above some highs. That's interesting, too. A lot of times you need good volume to break above resistance. So we're seeing some indications of, some just general bullish signs. Come over here. Is it above the 10-period moving average? It is greater than the 10-period moving average. Is it greater than the 200? Just throwing in some greater than signs. It's greater than the 200-day moving average. So long-term trend is up as well. There's that volume there. Ellen, sorry, you might have been looking at general other volume levels. We're going to be talking a little bit more about volume today as well, but that's kind of like a confirmation volume breakout as well. I do use, a lot of times we'll look at money flow. Money flow looks strong, get a strong move up, and that just, this indicator over here, like unbalanced volume, really just tries to net out buyers relative to sellers in the market. Strong, is up volume, is there larger volume on up days relative to down days, and this just nets it out over extended periods of time. Basically is what the money flow does. And then what about a momentum indicator on gold itself? Well, this is one that's used. This is that MACD 2-line indicator, as you can see over here. So you got the 12, the 26, and the 9. The 9 is just the average. For those of you that are using momentum-based indicators, and there might be others you're using here, this is one that's oftentimes used for maybe some of those longer-term moves once you get a crossover occurring. The last one we had was, basically right over here, and that was right off of this kind of a range where we did get above. We were above the 200 still. We were above the 10-period moving average. It was kind of still. It was a long upward trend, and we kind of. Let me get a different color here. Long upward trend, and we still kind of look like a bull flag pattern. So maybe a little bit of a continuation. It looks kind of similar up top here. There are some similarities. But yes, we are getting a momentum push down below as well. We're just barely, just barely getting that cross. Okay, we're very close. Notice we're not quite there, but we might be if that breakout does follow through. In fact, what I'm doing right here is I'm just looking at where, exactly those lines are at. The average is slightly higher than the main line, which is the that kind of light blue, that cyan line right there. We're very close, so it might be hinting at a push. And will that continue on? That's the question. So just looking at gold itself, you can see that there might be some interesting indications here. Okay. Now, why would gold be going higher and the market's really dipping? I mean, I've looked at some of the heat maps lately and they are brutal. Some of these heat maps have really taken a hit, but there are like some key areas. Let's just name off a few of these as to what might be pushing gold prices higher. First of all, there's geopolitical risk out there in the market. There's risk within economies. There's risk in, there's kind of like wars. Well, there are war type situations in different parts of the world. They're also tied into economies as well. So we've got that definitely for sure. We've actually also got, if you've been following gold, some of these commodities, gold and silver both. In fact, let's go over here. I'll highlight this for you. Gold, silver, there's copper as well, both showing strength. And in fact, I'm just going to highlight today's percentage change, not net change, percentage change right there. As you can see, that right there, those have all been pretty bullish. And silver, I guess, really with the highest percentage gain right there. But what we're seeing is central bank hoarding. What do I mean by that? The large central banks of China, India, and Russia have been buying and holding a lot of precious metals, and namely gold. We're looking at gold here, and namely gold. But, I think it might be similar for silver too. So that's another one. They're just stockpiling that gold. And well, that can put more, if there's that kind of demand, right, could tighten supply up of gold as well. All right. The other thing that can influence the price of gold would be something along the lines of the dollar. So just looking at some of the drivers, when you see a weaker dollar like this, it tends to influence asset prices in general, but maybe even commodities, materials, and commodities even more. And you see that pull back in the dollar. It's been really weak, and it's kind of been trailing with the S&P. I think some of this might be related to the tariffs, but gold is certainly benefiting from that. Some of the other commodities are as well. Okay. Last but not least, you guys, when I step back and I look at gold itself, I mean, you have to say, maybe as another component, investor enthusiasm. When prices go higher, that tends to attract investors to by itself. And we've seen some strong trends. In fact, let's just back this out as a final point. That's been gold. And you can see a lot of, sharp upward moves, consolidations, sharp upward moves. Just if I step back over the last 2 years and look at a couple of different time frames, that last, there was a MACD crossover down here as well. But, this was kind of a long consolidation and an extended run up. Consolidation, extended run up. And within these run ups, you can see that there have been a fair number of flag patterns that have occurred. They're flagging up. Are we just seeing right now? It might be that we're just seeing one of those flag patterns developing right now, kind of in line with a number of other, more flag patterns that could follow. All right. So here's the question. We've outlined quite a bit of, quite a few indications of bullishness and general strength in here. And we talked about 4 or 5 key reasons as to why, because we are seeing a lot of these drivers kind of coming together. And well, there's there's the trend, and gold's been quite strong. Where else could we look to maybe participate in gold itself? Any thoughts on that? Think about the different instruments out there. Some of you might be thinking, well, there are ETFs. Now, absolutely, there are gold ETFs. We don't do ETFs in this class. We do have a class. I think Connie does that on Monday. Correct me if I'm wrong, Cam, but I think it is Monday that we do that in. Monday, Connie has a class on Monday. It's not recorded. It's the only class I think that we don't have that's not recorded. But we got that as well. But the other thing is we could look at gold miners and silver miners for that matter. So actual gold companies out there. Because let's stop and think about this for a second. If the price of gold is going higher and we're getting gold out of the ground and we're selling it, yet we're selling it in the free market and the price of gold is up here, are we getting more for it? And if we're talking about individual companies, what do we call that? Call it sales. We call it sales and revenue. Sales or revenue, same word. I'll just get sales. Sales can go up. And if sales are going higher, that can help to offset expenses and hopefully build more earnings as well. So let's take a look at some of the miners here for the end of the week, because we are seeing gold showing strength, and that, like I said, it could influence some of the miners, and they do tend to move up with gold prices. Although what's interesting is they have lagged gold prices over a longer period of time. But oftentimes, historically, they will catch up. So even though gold's had these big runs, the miners have not been as strong collectively. Now, to find those miners, I want to do this. I'm going to go into the scan tab, and I've set up a couple of different categories for us to scan through. First and foremost, because we do, some of you do look at options. We read that in the disclosures as well. We're putting over here, and we're saying they can be all optionable. We want to see all optionable companies that are in the gold miner group. I'll show you where I found that at. In fact, let me show you where I found both. The categories is where I found the all optionable. So when I'm scanning in, very important to know what we're scanning for, and that would be all optionable companies. Over here, I went into industry, and it's actually materials. And remember, materials and specifically commodities will tend to run when the dollar is weaker, right? So I'm going to go over here. I'm going to go right into my metals and mining, and bam, voila, right there. Now, what's interesting, if I click on gold, you can see copper in there as well. There's silver, there's steel. If I click on gold, there are a few companies in here that are just almost exclusively silver, although they do some gold and they do some copper. But so just by selecting gold, we'll get quite a bit of companies that there are going to be some overlap on. Now, you'll notice I'm not scanning through the S&P 500. I'm scanning through all optionable. So that's a lot more than just what's in the S&P 500. So I wanted to have some additional criteria here on what to screen through. And that is, I want a minimum price of $10. I'm not looking for anything close to a penny stock. So that's kind of a high number. Some people might choose $5 or $7, whatever the case might be. We chose 10 as our minimum here. Okay. The last but not least, we chose an average volume study, a 50 period moving average, a simple period moving average is greater than 1 million shares. So they've got to be trading 1 million shares on average over the last 50 bars. And this is on volume. Now you can get this by going into the study. The close is easy. That's just in stock. But the study over here, you want to click under add filter up top, go down to study, click on that right there. And where I found this at, just click on the drop down. You're going to get a whole host of additional selections and criteria you can choose from. It's right at the very bottom. Not the very bottom, but the bottom of this kind of grouping. There it is, average volume. There's actually an unusual volume that can be really helpful as well. But there is your average volume. Now with that, then you can just adjust. That's the default. You can choose 30 days, whatever the case might be. But real important to tie in average volume. And a lot of times traders will look for, 1 million plus when they are considering options. I just threw that in for you guys because I know many of you do trade options. You look for options specifically. So I wanted to throw that out there. These are inherently connected, and plus I wanted to get a price that's at least above 10. Didn't limit the upside in terms of the price over here on the max. We kept that open, but I just wanted to put the limit in there. So all of these kind of work together. All optionable, looking at gold miners, minimum of 10. We're going to have an average volume of 50. And we're going to be looking at 1 million shares over that 50 days, okay? Which are going to help to, be a little bit more, oftentimes more liquid type stocks that could be useful for, there it is again, optionable stocks. Okay, we've got, click on it right there. It says 19 matches. I guess, after we put in the moving average, we knocked out a handful of those. But here you go. These are those companies. I've got a number of different just categories you could see over here, but they're all in gold. They're all sub-industry gold. You recognize some of these names perhaps. There's Barrick Gold is a big one. Some of them have volume, yield. You can see the PE ratios, whatever you want to put in here, you've got. What I want to do next is we want to go back and look at the charts and see if we're getting some of the strength that we saw in gold itself. How are these positioning if we don't want to buy, the gold commodity contract itself? Or we're not really looking for an ETF. We're looking for underlying share prices. Where's the strength? And here's the 1 week comparison. But yeah, maybe this one's run up too much. Some might be setting up very nicely for bull flag scenarios, and they might have the price of gold breaking out that might start to influence more traders tomorrow, through next week. We don't have a ton of this week left. We just have one day, but Friday, tomorrow. But next week, it could be interesting as people are looking and hearing about gold prices breaking out. Maybe it could influence some of the miners. So what I did next, because we want to look at the chart, so I'm going to go from there. Let me just see. Yeah, let's see. Let's take a look at, by the way, you can make comparisons between gold and gold miners historically as well. I'll pull that up too. I can show you how to do that. Let's do this. Over here on the right-hand side, initially, we can go save as watch list. I've already saved us a little time and done that. And I've got it pulled up right over here, our gold miners. And these are all 11 of those right there. Now, what I've done, this, of course, is a must, anytime there's a larger list of stocks we're going through. But I've just made sure that I've linked this up over here. This is linked to one. This is linked to one over here. If you are new, many of you are already aware of that. I'm just going to go ahead and click on these now, and let's just see what they look like over a shorter period of time so we can kind of get a sense of this. Now, I'm going to take off the 200-day moving average, but we can leave that 10 period on there. That might be a good, useful tool. I'm going to leave the moving averages and the money flow on there as well, and the MACD. So here we go. AEM first. Okay. What do you see here? Anybody seeing a chart that might stick out like a chart pattern that might stick out like a potential sore thumb? We don't know if it will, how high it'll go or whatnot. But I am seeing, I'm just going to outline it for you. You guys tell me if your thoughts. But there is the big upward move. Is this a possible, well, it'd be a very large bull flag if it is a bull flag, right? We just broke out here as well. There is a breakout. Technically, we closed above it. Question is will it run the length of an extension of that flag pull? Ooh, that could be a bigger one. Let's just see what that looks like. I'm just going to highlight this to kind of show you. A quick way to do this, too, is you can use Thinkorswim tools down here, right in the bottom right-hand corner of the screen. I'm just going to click on the diagonal line. I'm going to hold this right here. I'm going to click, pull this guy up right there. Right there. We'll click on it, and I'm going to right-click, and I'm going to go ahead and duplicate that guy. I'm going to pull it over here and hold it off the bottom. And so we're basically just looking at that extension, possibly, if we were looking at a bull flag extension, and we're saying, hey, this run-up should have made, for the bull flag target to be hit, longer-term target, would be like up to this level. So you can still see there is a fair amount of price left before that pattern is reached. Okay. Now, it looks like it's so strong, it actually broke out ahead of gold. This one did. You can see down below, let's do some checks. Money flow broke out as we can kind of see volume is starting to expand. Coming down here, all right, to our momentum indicator, we've actually already got the crossover. Last time we had a crossover, was a pretty decent run. We don't know if we'll get that again, but I said that's why some traders will look at a momentum indicator like a MACD 2 line just to see what they're getting on that. And yeah, so you're getting that as well. Okay, but the whole idea here is there more upside potential? Yeah, possibly so. I mean, there's the run up. We got past earnings. We might not have earnings over the next run if it were to continue like this, but that's something that could be looked at. We did get a little bit of a shooting star today. Let me normalize that. There we go. A little bit of a shooting star. In other words, we shot up. We had an intraday high that came in. We pulled back. So the wick of that candle was actually quite large. Now, that's not too unusual. If you come on and look over here, did you see any of those dojis or shooting stars? I can see, yeah, I can see some over here too. That's just kind of part of an upward trend sometimes too. It doesn't necessarily mean that there's weakness there, but this could be something that we could look at for possible trade later this week. If somebody look like a paper money scenario, if they were looking at this a paper trade, right? Hey, if you want to do the bull flag, Is it breaking out? If it falls into that scenario, that could be a paper money trade that somebody could place because there could be a follow through on it. Okay. All right. What other paper trades could we look at? Let's go through this list. I'm going to go through a few of these. I wanted to kind of break that one down because it's already, I think that is our strongest one. If I'm not, well, there are some other ones. Alamos Gold. Okay. See, it's already kind of broken out. This one has yet to break above the high, AU. So some might look at this as a paper trade because here's the pullback and here's the follow through. Is it starting? Kind of a rally coming up here, and will it extend? Yeah, maybe some traders might say, gosh, Mike, we're so close up top here. So close to resistance that we might want to wait and see what it does around resistance. Does it break through? It's a little bit of a laggard. Sometimes you get leaders, some that are even stronger than gold, and we're getting some of those already. AEM, AGI are stronger, and this is a little bit of a laggard. Has not broken out yet. And so what's interesting is if gold keeps breaking out, what some traders will do is they will look to trade the leaders. And when the leaders have run their course, sometimes, not every time, but sometimes the laggards are like in this scenario. They're kind of like, they're kind of just getting ready to get going. Whereas the other ones have already kind of broken out and run. So sometimes traders will look to trade a fair number of these in and out, you could say, depending upon the price of gold still being strong. Let's continue on. Whoa, now this is interesting because this has been downtrending. Now, I just got through talking about laggards. This one, what's the key difference here? It's that trend, right? Every one of these thus far is above that 50 or that 10 period moving average. And this one actually crossed above that MACD quite early. But the one thing this doesn't have is a trend. And so we have yet, this is maybe one of the key laggards, and maybe a higher gold price can make all the difference in the world for this company. They might just be able to, with the higher revenues, maybe offset some of their expenses and kind of go from there. But like this move up right here, if this were to go up and kind of consolidate, I mean, shoot, we've got to get a higher high still on this one and a higher low as well. So there's a lot going on here, but it could be an interesting one to keep an eye on later, perhaps later on for the possibility of a paper trade. Right? So you get kind of a feel what it's like to, maybe trade some of these miners as the price of gold is breaking higher. But like I said, we're not anywhere near that. That's one of the, maybe like a true laggard there. GFI, okay, trend going up, really showing some strength over here above a 10 period moving average and quite a strong breakout. We actually gapped up higher, extending up here. Let's look at Barrick Gold. Okay, Barrick is kind of between a laggard and a leader. It did break up earlier. I don't even think it broke out, but you're still kind of in this range. I threw a little trend line on here because we still didn't make it past the trend line. Notice if I'm drawing this, actually I got to raise it just slightly, it appears. I drew this over prior highs. Yeah, we held back below that trend line. But that is Barrick Gold. By the way, Barrick Gold, I don't know. I sometimes on some of these, you can see a little bit more over here, but for those of you that look for additional patterns within patterns, I talked about this in the swing trade class recently, and that's this. This is sort of a, yeah, see that? What is this pattern right there? It's a little bit long. It's really kind of broken down into three distinct patterns. You get a rounded bottom down here. They refer to it as rounded bottom or a saucer bottom. It's broken down into a bull flag. And Wiley says CH, cup and handle, BJ, cup and handle. Exactly. You guys see the cup and handle there? Now, is it a cup? Will it break up? Or we might just be, so you got the saucer bottom, you got the flag pattern here. And are we on the verge of maybe inching higher and breaking above that? That's the question. Now, what do those kind of moves look like? What are the projections on a cup and handle as we break that down? I've got to give us a little bit more room on this one to kind of highlight that for you. In fact, let's do this. I'm going to just tilt my head a little bit to the right just to see that bottom. There we go. What you do is you take the low up to the high, and with the cup and handle, you take this same price range to the upside once you break above that upper cup and handle. Let's do this. I'm going to duplicate that guy and put it right over there. Whoa. So that's a little bit longer than a bull flag, but you can see the extent that that might, in terms of the pattern. Now, we don't know if it'll go. Some might say, Mike, that's overly optimistic. That's why I said, whoa, maybe it is overly optimistic, but that's what a normal cup and handle projection looks like, trajectory. And it's kind of similar to like an inverted head and shoulders pattern as well, or a head and shoulders bottom pattern, where you take the highs off, you take the measured move off the high and the low, and you measure that on the breakout. So it's not an exact one. I'm just giving you guys just kind of eyeballing it here, but that could mean a fairly big move. Now, the pattern over here, in terms of, oops, let's do this. I'm going to use this. You know what? We'll duplicate it again. Fine. For the bull flag would be a little bit lower. So it would reach up into about this range. Notice I'm drawing this range off the bottom as opposed to a breakout high. Yeah. I'll put this in blue just so you guys could see it. But either case, well, and by the way, that came right to this prior high, and sometimes that's where they'll run. I've talked about gold before. In case you see a lot, wondering where all these lines are on the chart, we've taken a look at gold, Barrick Gold, that is, a few times as well. But there you go. It's kind of in between. It's not really a leader. It's not really a lagger. It's just kind of like really close to where the price of gold is at, although it's lagging it a little bit. So I'd have to say it's a little bit of a laggard because it's not breaking out just yet. Okay, let's hit a couple more, and then we'll put a paper trade in for tomorrow. Okay, here's another laggard, Kinross Gold. Okay. This is kind of a step behind gold itself, or Barrick Gold. See all these interesting comparisons. I'm going to give you guys a historical perspective of some of these relative to gold prices as well in just a second, so you can kind of see, but I'll show you a cool little comparison tool. Notice over here, we're kind of in a sideways channel. Yeah, we've got a ways. If you break out, some would say, hey, if you break out of this level here, if you can break through there, maybe they take this trade to the upside. This is what we call in the swing trade class a T1 trade. You're looking at a target one trade. That's the target 2 is the full extension of the move that we'd seen earlier, and that's going to be much, much higher. That's like a T2 way up here. Okay, those are some of the key differences here as we look at that. We do go through that in the swing trade class. If you're interested, I can get you a link to that. I think many of you, I know many of you are in that class, but if you're new and you're looking for like a specific breakdown on how to make the, how some traders will use those specific measurements for their trades and these paper money trades here, I can include that here in just a second. Okay. All right. Yeah, it's going to take me a second. Okay, I'll get to that in a minute. Okay, so with that, let's continue. Let's get the rest of these. There's NEM. Okay, so maybe even a step higher than Kinross here. Good solid follow through today. In fact, that might be one of the leaders today. Let's see, 4.63%. It might have been one of the bigger gainers on the day. 4.63. Yeah, it is the highest, actually. It looked like the biggest move. Turns out it is 4.63 right there. So I'm just looking at today's net change just to see, relative. We've got a few of these that are in. That's our silver one. These guys do quite a bit of silver mining, this SSRM. We'll hit the silver and the copper miners towards the bottom here. So let's just see. Here's silver, just so we can see what silver's been doing, the commodities. I kind of shift into this a little bit. Silver had a breakout. Now, it's not a breakout above these highs like gold, but it's a breakout nonetheless. Here is SSRM, very close to silver. As you can see, this is leading the price of silver. Here is Wheaton Precious Metals, and that too is leading the price of silver. They both do gold and silver though here. Okay, so let's do this. I mentioned to you guys that I would just show you this. This is that swing trade class where we do talk about each and every week. We'll talk about some of the specifics of those retracements and a lot of like kind of risk control as well. We'll talk about potential exit levels, and I can throw that in the chat if you're interested. I think many of you already know, but there you go. I put it in anyhow for you. There we go. All right, let's do this. I was going to show you a quick comparison here, longer term. Let's just say for example, we had like, here's Kinross. There's Kinross, and if you go up top and click on the little dropper icon, you can do a long-term comparison, COMP, right there, comparison chart. And when you do that, it defaults to SPX. But if you come over here into the SPX and you just type in /GC and then go tab through it, okay, it'll choose pink. We should be able to see that fine on the chart. And there you go. So that's followed gold really, really well. Actually, NEM, you see, here are some of the laggards. Do you see the difference between gold itself up top here and down here? Here's gold and here's NEM. Quite a big difference. You can see that gold actually consolidated a little bit less and it broke up higher, but there is a little bit of a range in there. I think you're going to see the same thing for some of these other ones too. You know, that's held up pretty well to gold. This one more recently is not really a big breakdown. There's kind of a wide range in there, and I think gold itself is off. Although I have a lot of indications on here, you can still see it's quite, there's a little bit of room where gold prices have shot up, but the underlying, the silver or gold miner in this case, has held back a little bit. So comparison chart, I just had seen that is a question coming through in the chat. I wanted to highlight that for you, but comparisons lines can be really cool to see how they're holding up relatively speaking. All right. Well, as we're going through this, I'm going to go over here and I'm going to go ahead and type in, well, let's just do this. We can look at any one of these. This company is right here on the verge of breaking out. Now, will it break out or not? That's a real question. Will it break out? But maybe what we could do is we could set it on this particular stock, maybe perhaps an alert. We could have an alert in place and say, well, if the price of the stock breaks above today's high, let us know. I got a ton of lines in here, but I'm just going to try to isolate the cup and handle. There we go. So there's the cup and handle. Let me know if we break above our highs today. I'm going to right click, create alert, and I'm just going to type in breakout question mark right there. That's it. Breakout question mark, and let me know. Because here's the thing. Sometimes we say, gosh, well, don't we, doesn't somebody want to get in here? Like as an example, don't you want to get in here? Well, there is resistance there. We have to remember we're close to resistance. And even today, folks, we bounced off that resistance level. And what do? We fell back. So until we get above and we can clear that resistance, that might be an important barrier that some traders want to get behind them and say, gosh, did volume do well? We had a good volume day today. The MACD on this one has not yet crossed over, but maybe it could. So these are considerations to look at. Okay, but I've got an alert on this one, first and foremost on this one. Now, what I want to do, we'll go ahead and just take a look at AEM. And I'm going to use one of the techniques that we talk about in the swing trading class. I'm going to tie this in as an example trade here. Okay, a paper money trade. So let's see, prices broke out. Now, what some traders might look to do is they might say, well, since we've broken above this initial high range, why not use something like a moving average as a potential exit range to get out at? Or even that, or below a support level. So this should probably, that 10-period moving average should probably catch up fairly quickly, even if prices hold up in this range. But this could be like somewhat of an exit that could be adjusted each and every day. Like a stop, for example. We talked about stops in the disclosures there, but that's something that could be utilized. Okay, I'm just going to put this in just as an example trade, and we'll finish up here, like for tomorrow, for example. All right, now I wanted to show you one anyways. Now, maybe it doesn't have everything that you might want here. In fact, maybe we would have tried to got on a breakout earlier, but it did close above this high range, and it closed above it for the first time. So that might be an indication that it's ready to run. Let's say if somebody's interested, you know, they like this, we'll put this on as a paper trade right now. So I'm going to go into the trade tab. And by the way, before I do that, I'm actually going to set the stop near the prior high at 100. I'm just going to put it slightly below 100. I'll do 99.75 as our stop level, okay? I'm keeping it below here, but what I'm anticipating is that this moving average will probably shoot up tomorrow because looking at 10 days, in the last 10 days, has been moving up, really, well, much of it has. And so I'm anticipating this going higher. So with tomorrow's print, if we open up anywhere in this range, so I'm going to go ahead and just put it at that 99.75 as a stop. So let's do this. Let's go ahead and jump over here. I'll put just a standard 100 shares on, and we'll do this. I'm going to go ahead and click on buy at the, what was the last trade of the day, and where are we at after hours? Well, probably between 102. I'm going to go 102.50. Don't know if we'll get a fill on that. We'll put a limit. Right clicking, I'm going to go buy custom with a stop. Let's go over here. We're going to put a good tail cancel on both because we're looking at an order tomorrow. 102.50. And our stop, which is also good tail cancel, I'm going to go down here and I'm going to plug in right there. Let's go ahead and do that 99.75. Okay. Just a stock trade here in paper money is what we're setting up here. For people that look at this and they say, yeah, I want to participate. That's how we do it in this class. We'll just look at this based upon, you know, certain criteria that traders may be looking for. Now on this one, remember, we were showing really quite a bit of strength in terms of what we were getting here. The volume was up, money flow really showing some good strength on a breakout. Crossover's there. So I am seeing the crossover. And then we're just closing above that breaking above those highs. All right, everybody. Well, hope you found this informative, useful. I didn't see a survey in the chat unless Cam posted one earlier. Let's see, I could scroll up and take a look at that. But folks, good to have you here. It was a fun class to fill in. Remember, we're talking about, you know, something that happened in the markets today that might impact trading activity tomorrow or later next week. And that's what we talk about in this class. It is a great class in terms of after the close. Barb should be in next week, and she does a great job with it. If you like this class, definitely smash that like button. And bottom of the screen, hit that subscribe button. If you like more details about the swing trade, which is what we do in that class, I did post that earlier in the chat for you, and just showed you a playlist. But that's on Tuesdays in the afternoon. So with that, have a great rest of the day, everybody. We'll see you.